Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the Forex markets. Well guys, today we have decided to take a look at the Great British Pound. It's just because in the euro currency you can see that market mostly stands in tight consolidation, so it makes no sense to comment the same thing. It's forming some pennant shape. So you take a look on the daily chart and the fall time frame chart, there you clearly could see the performance of the euro. Meantime, I think that we could take a look at the cable, make an update, because last time we discussed it on 21st of the July, and there are a few moments, important moments have happened since then. So first of all, we briefly have mentioned this as recent comments from the Bank of England. So yes, they have risen rates significantly and intend to do it more. But here is more important that they have acknowledged the crisis. They have acknowledged the recession in the economy. And this acknowledgement was, well, as economists said about this moment, that Bank of England has capitulated at the face of the coming problems, because usually the authorities trying to hide the truth on the different speeches, making them a bit not clear, so trying to say that it's temporal, that everything is good, we control the situation and so on. But here the Bank of England said that, well, we expect inflation 13% and the depression in the economy within the 5 quarters in a row. So this is really big statement, and on the background of this statement you could see that despite that rate has been raised recently, pound shows no significant action to the upside, although actually comparing to the euro currency provides good carry opportunity. So that makes us think on a few moments. First of all, we start from the weekly chart, because in the weekly chart we have important information. For a long time we're talking about this head and shoulders pattern that might be work, for instance, and with the performance of this, actual market stands at the point where the bullish reversal has to start, because it harmonically equals to the left arm. Market has completed weekly major ABCD XOP here. So this is the last outpost for the bulls, breaking it down, moving below the XOP lows, coming back to the lows of this in February 2020, tells us that market will take it out of this and shorts will fail. That's why this moment is very important. At the same time, here I have the few things that I do not like. First of all is acceleration. So previously I talked about this. Actually, if you will calculate the OP, it stands right there. So actually market hasn't shown any reaction on the OP. It just has been passed down. Then followed minor pullback. This was the 618 support and oversold, and then market goes down to the XOP. Performance after XOP is also not very impressive. So it's minor pullback here, no great signs of the reversal yet. So here's overall situation stands, well, tricky. And chances that market just will fail to show the starting upward action, start dropping low, stands significant. It means if this will happen, market should take it out with this loss, and we go to the monthly big target that we have, the large all-time ABCD pattern on the monthly chart. So you can see this one, COP already is done, OP stands 95.60 approximately, below the parity. So parity of course also will be important, but this is approximately 113 area. Breaking it down probably will not happen fast, it's just because you can see oversold on the monthly chart. But anyway, if action starts there, it might be important, because take a look, market wasn't able to bounce up from the COP. Collapse happened, first touch of the COP, second, some fluctuation here, market is moving down once again. So this is not good performance. Actually we have mostly, you could call it as a sideways action for a considerable period of time. So that's what about the weekly. On the daily chart, we have the free drive. If you remember, we even have traded it a couple of weeks ago, starting from this point. Well, that was together with the XOP completion right there. A minimum target of the free drive should be above this top. So currently, market still has chance to complete it. As you can see, this pullback is going up. But take a look at the performance. This is not the reversal, guys. If we suggest that this free drive should become the reversal on the weekly chart and trigger reversal, it seems not. It's just because, well, this is not the way how market should reverse. This is too gradual and too slow action, which is not inspiring me for taking the major strategical bullish position on the cable. I'm not even sure that the free drive will be complete. We'll see what will happen on the CPI report. Maybe if it will crush the United States temporarily, dollar I mean, so it could provide some impulse for other currencies to move slightly higher, show its upward pullback. But in general, this performance is not very inspiring. Finally, on the intraday charts, on the 4-hour time frame chart, we have minor head and shoulders that has worked nice. We also talked about this, but now we have the nested head and shoulders. So the bottom has been formed with the minor pattern, and now you can see that we have larger head and shoulders. And actually, depending on this pattern, we could make the conclusion of what will happen on the higher time frame, in particular on the weekly chart. Bulls, to have the chance on success on some reversal, should be sure that market stay above 1960 area. I would say 1960, because it harmonically equals to the left arm and where this reversal should start. So to understand what will happen in nearest time, you need to control the head and shoulders. Of course, you could find lots of different patterns minus stops that you could trade as well. But strategically, this is vitally important that these head and shoulders will start working for bulls. So if it will fail, market drop below 19 even, it means the crash of the head and shoulders. Simultaneously, it will mean crash of the free drive, and with a high degree probability, it will mean the downside continuation taking out of the 113. That's why this pattern is very important. Why I'm talking about 119 is just because if we'll take a look at the hourly chart, we have the ABCD. OP has been completed. Since we have very strong acceleration to the OP and, well, anemic pullback is very choppy. It's not the reversal. It means that chances that market will keep going to the XOP very high. And XOP is 1902. That's why we are watching on the 4-hour time frame chart as potential bottom of the hand shoulders, right shoulder, is 1960. So that's the area to control. That's actually what we have currently on the cable. It comes at very important, I would say, vital points, and that's actually could determine further direction very, very soon.